Right now, what are some of the stories making the headlines? Look at West Africa today. The market were a little bit mixed as we see the end of the weekend. In terms of what we have in the news this evening, the World Bank says yesterday that the new level threshold for those who are poor across the continent around the world will be $2.15. Today, the European Union and Nigeria says that the trade relations between the two, between Europe and Nigeria, went up 25.8% to about 28.7 billion euros. The World Bank said Nigeria says 9, and other countries accounted for about 75% of the gas flaring globally, while Ghana's crude oil production was down 17.7%, 55.06 million barrels in total for the full year 2021, while the Bank of Africa in Cote d'Ivoire, listed on the Ivorian Stock Exchange, the BRVM, fell 8%, net income down 8% for the first quarter, January to March, to 5.14 billion CFA franc. That's some of the stories across the West Africa this Friday as we go into the weekend. But let's return to the Nigeria space, where the equities index rallied very strongly this week and trailing the rally that started late April on the back of earnings releases. The NGX All-Share Index is now at about 20%, roughly 19.7%. That's the index return since 2021 started, and the total market value of listed stocks up some 23.16% as the market closed today. It's a good time to speak to one of the market dealers and professionals. Johnson Chukwu is the CEO at Carry Asset Management and also one of the licensed dealers, and is joining me now on the show. Thanks for coming through, sir, and congratulations to yourself and your others and investors who are smiling to the bank this evening, because it's been a very good week.
I hope, Bosun, you are part of those who are smiling to the bank.
I'm smiling here in the studios, my friend. It's good to see you. Thank you so much. It's a Friday. We appreciate making the time all the time, speaking to us on the show. What were the drivers for the rally this week on the listed counters? In particular, we've seen a very strong week for consumer goods and industrial goods.
Well, I think the basic thing here, we've seen those sectors, the consumer goods and the industrial goods, are beneficiaries of the current economic environment. If you look at the consumer goods and you look at the fact that we're moving towards an election period, a lot of liquidity being injected into the economy. And like I actually predicted this at the beginning of the year, that the consumer goods sector will be a major beneficiary of electioneering activities, because you've seen a lot of people who are involved in some form of campaign, and they're being paid on a daily basis for attending rallies or whatever political activity they're engaged in. So they are spending their money on basic consumer goods, given the level of poverty, given the structure of the expenditure profile of households. So the consumer goods, and if you look at those performance in the consumer goods sector, you talk of the confectionery companies, they are major beneficiaries. So we've seen that the flour mills and what have you. And again, the industrial goods, the cement companies, you know that normally prior to an election or a pre-election year, virtually all the levels of government are involved in some level of construction activities on one level of construction activity or not another, just to encourage or present their scorecards to the voting population. So we expected these sectors to benefit, and we've seen the sectors are major beneficiaries of current expenditure in the economy. And that's what investors are taking position on, knowing fully well that the performance of these companies will actually be quite strong in the current year.
Interesting. If you look outside the consumer and the industrial goods space, what other sectors are investors focusing on, Johnson, and why are they doing so? We saw a big jump also in the shares of MTN, for example. What's the driving force here for these folks outside the traditional banking and consumer goods and industrials?
Yeah, if you look at the likes of MTN, you know that they just gotten their payment service bank full license, and they're likely going to roll out. They also expected to roll out the 5G network by August. So it's expected that the rollout of the payment service bank will further enhance the company's revenues. Again, it's going into a second major revenue source, which is one of the major things that businesses are driving, that they should have a secondary or a second major revenue source. So by becoming a payment service bank, one expects that this will dovetail or trickle down into improved revenue for MTN. But if you look at other sectors that are benefiting from the current market rally, you have the banking industry. We've seen the banks have been paying dividends. Last week, Access Bank paid a dividend of 70 kobo. This week, Fidelity Bank paid about 45 kobo per share. And there's expectation that First Bank will announce its dividend payment. So investors also either locking in on earnings from their investment in banking stocks or taking positions hoping that this trend will continue. Then that sector is benefiting. You actually mentioned the ICT sector, where the telecommunications sector operators are part of. So I mentioned the banking industry, I mentioned the ICT sector, and then we had already talked about the industrial goods sector and the consumer goods sector. So these sectors are certainly going to get, another sector that is also going to get the benefit of what's happening in the economy or global economy is the oil and gas sector. The likes of Seplat have been reporting very good returns. We know that those in the upstream sector, which Seplat is one of the few that is listed, is enjoying heightened or elevated prices of their products, given the current price of crude about 108 naira per barrel. So that sector is also supposed to benefit from the current economic environment.
Interesting. If we step away from the equity space into commercial paper borrowing, the market is very busy with this week. Dangote Cement completed its offering. Dufil Foods was also admitted on FMDQ. What's your take on these offers, this borrowing across the marketplace by big names in industrials, consumer goods space?
I think what the likes of Dangote and Dufil, I think Dangote is about 1.7 billion and Dufil is about 30 billion from the money market, is they are taking advantage of the fact that there's a lot of liquidity in the financial system and enjoying the benefits of disintermediation in the sense they are borrowing directly from the public and they are borrowing at below the rate they could have borrowed under a structured lending from banks. Again, because we are looking at an environment where money market rates, particularly federal government T-bills, is trading at about 4%. So investors would rather go for blue chip commercial papers that are giving more than twice the return on treasury bills, knowing that these institutions are not likely going to have major liquidity issues or sovereign issues in the next 270 days or maybe less than a year. So investors are taking positions that are what we call a fund position. One, there's a lot of liquidity in the system. Two, a return on comparative instruments of similar risk is quite low. Investment in federal government T-bills, like I said, yield is for 364-day bills is trading at below 5%. And these CPs are trading at twice what you can get from FGN T-bills. So it makes sense for blue chip companies to come to the market, enjoy low yield, and given the level of liquidity we have today.
So we got liquidity in the market, but give me your thoughts about the investment market as the country's political arena begins to grab all the attention.
I think investment will remain in the short end of the markets of the investment spectrum or the tenor spectrum. Most investors are going to stay in the short end of the market, commercial papers, fixed deposits, while they watch out to know the direction of the political activities. Of course, when you talk of a political environment pre-election, there's already heightened political risk, which goes with heightened economic risk. So the key thing for you is to stay in the short end of the market and watch developments so that immediately after the election, when we have clarity on the economic direction of the next government, you will now be in a position to liquefy your investment at low cost and take more strategic position.
Interested if all of this what you are talking about has any bearings with whether earnings will in second quarter, third quarter, into the end of the year will make so much impact, considering how politics is beginning to push almost everything else aside.
Yes, if you look at what we discussed earlier, some sectors with beneficiaries of heightened political activities. The consumer goods sector, you're going to see rallies, people being paid 2,000 naira, 5,000 naira to attend rallies. And like somebody said that if you call a rally and you see a massive crowd, and the next opposition party or the next party comes, the same crowd will assemble again because they are being incentivized with some stipends. So these people, because of their level of income, will only spend largely on basic consumer goods, food items, food-related items. So that sector will be a beneficiary. Sectors like the textile industry will be a beneficiary. We are going to see different uniforms being paraded around. Sectors like I mentioned, the industrial goods sector, governors will want to go into some level of public works in the next 12 months prior to an election to have what they call to have some bragging rights or prove what they call democracy dividends so that we will campaign on that basis. Some of these sectors will benefit from the economic activities. There are sectors that will not so much get the impact in the sense that if you look at those sectors that do not have immediate social or political value to the politicians and the electorate, they will take the backstage. Issues related to strategic and difficult economic decisions, such as related to the likes of subsidy removal. So if you look at the oil and gas sector in the country, in terms of development, is going to remain where it is today until after the election when more strategic decisions can be taken, some of them difficult but necessary.
Okay, it's time to take a ringside seat. And for those of you who have investments in the market, we wish you all the best. Thank you so much, Johnson Chukwu, CEO at Kauri Asset Management. Have a great evening and enjoy your weekend.